Hello and welcome to a session on equity-based crowdfunding and the case study on AngelList. In this session, we are going to learn about AngelList's characteristics and basic business model. What is AngelList? AngelList is one of the largest crowd investing platforms in the world and is based in San Francisco in the US. It provides equity management, banking, fundraising, recruiting, and analytics for high-growth US technology companies. In addition, investors can invest in venture funds, which are publicly available on the crowd investing platform. Fund managers can run venture funds or syndicates on the platform. AngelList's fund managers have invested in more than 280 startups that have become unicorns valued at more than 1 billion. Examples of these companies include Stripe, SpaceX, and Epic Games. In the year 2022, AngelList counts more than 16,800 investors and 2,900 fund managers. Both funds and syndicates have invested more than $6 billion of capital in startups since AngelList's inception. Now, let's take a look at the history. In 2010, AngelList was founded. In 2013, AngelList launched venture funds with fundraising tools just for top-tier startups and investors. AngelList also introduces syndicates where investors can invest deal by deal alongside lead investors. 2 years later, AngelList expanded to the UK, Canada, and India. Again 2 years later, AngelList launched venture funds to provide fund managers with a performance-based way to build their venture business for small funds. In 2018, AngelList reached over $1 billion in assets under management. 2 years later, AngelList launched rolling venture funds, an always open venture fund to streamline fundraising and deployment for fund managers. In 2021, AngelList introduced founders products, including roll-up vehicles and stack. In addition, AngelList's assets under management grew to more than $10 billion. We now take a more detailed look at the different business units of AngelList: the fund managers, founders, and investors. The first business unit is about fund managers. This business unit is divided into the subcategories of venture funds, rolling funds, and syndicates. In the venture funds subcategory, the fund manager can raise capital, close deals, and manage the portfolio. AngelList takes care of all the back-office services so fund managers can focus on deals. In the next category, rolling funds, investors subscribe quarterly so fund managers can raise new capital regularly and fundraise continuously. In the final business unit, syndicates, fund managers raise capital on a deal-by-deal basis, leveraging the AngelList capital network and deploying it to a single startup. The process is similar to investing in a special purpose vehicle. The next business line is for founders and startups. Roll-up vehicles allow founders to raise capital from investors with a single cap table entry and bundle small checks into one entity. Founders receive a single link that allows investors to send money to the startup online. Another service is Stack, which includes equity management, banking, fundraising, hiring, and analytics. With these services, companies can get automatically updated cap table, managing checking accounts, and physical and virtual debit cards, make free transfers, set up data rooms, manage equity rounds, and get automatically generated financial reports and startup metrics in real time. In the next step, we take a look at investors. Investors can invest in syndicates in addition to lead investors. As mentioned earlier, this process is like investing in a special purpose vehicle to buy startups. The investors can build a portfolio deal by deal alongside lead investors and fund managers. With the option of rolling funds, investors have a quarterly investment plan for investing in selected venture funds. Furthermore, investors can calculate their rolling funds returns. To understand the company's revenues, let's take a closer look at AngelList's fee structure. We can break down the fee structure into the different business units: fund managers, founders, and investors. For venture funds, fund managers must pay a fixed amount between $3,500 and $35,000 and a variable amount between 0.15% and 0.75% of the fund size, depending on the assets under management in the funds. If the fund managers lead a rolling fund, they must pay a fixed amount of $2,500 and a variable amount of 0.2% of the fund size, depending on the assets under management in the funds. If the fund managers manage a syndicate, they must pay a fixed amount of $8,000 and indirect costs in the form of a carry of 20% of profits. In addition, each fund manager of venture funds, rolling funds, or syndicates must pay a regulatory fee. The next subcategory is founders. For roll-up vehicles, founders must pay a fixed amount between $8,000 and $10,500 and variable fees for additional services. For the stack, startups must pay a fixed amount between $50 and $300 per month. The next subcategory is investors. For venture and rolling funds, investors must pay a certain percentage of the management fee related to the proportionate investment share and indirect costs equal to 20% of the profit. For the syndicates, investors have to pay a certain percentage of the fixed amount of $8,000 in relation to the proportionate investment share and indirect costs equal to 20% of the profit. To better understand AngelList's business model, a business model canvas is now used. In this business model canvas, we focus on the value, revenue, and customer segments. AngelList generates value for investors through access to early-stage projects and small amounts of funding from a few hundred to a few $1,000s. Startups can also gain access to capital and a broad investor base. If we take a closer look on the revenues, AngelList charges fixed amounts and a variable amount as a percentage of the total investment capital from fund managers and investors. In addition, AngelList charges to startups service fees. As a final segment, we now look at the customer side. On the one hand, AngelList has both private and institutional investors as customers. On the other hand, AngelList has startups as clients. To highlight the key messages from AngelList's presentation, they are now summarized on the last slide on the presentation. AngelList provides equity management, banking, fundraising, hiring, and analytics to high-growth US technology companies. In addition, fund managers can establish and operate venture funds and syndicates. Moreover, investors gain access to early-stage projects with small amounts of investment and funding, and startups gain access to a broad investor base. In case you want to read more about equity-based crowdfunding and AngelList as a case study, check out the chapter Crowdfunding in the book FinTech Business Models. Thank you for your attention.